But according to our next guest, there's one technical indicator out there that's flashing a buy signal. Let's bring in Matthew Kimmel, Bitcoin research analyst with CoinShares. You have to convince me, Matthew, why this actually might work this time. Why do you think?
Well, first, thanks for having me. But what I could tell you is that there are actually several positive signals that could mean that Bitcoin is soon entering a stage of more price stability or even nearing a market bottom. And so the first is that investors that bought in the previous market cycle back in 2016, 2017 on the rise up to $20,000 per coin have resisted the urge to sell their coins in this past market high throughout any point last year when they could have realized gains. This is sort of a signal suggesting there is some long-term conviction amongst some Bitcoin investors. The second being the miners. And so miners are the laborers that are sort of adding transactions to the Bitcoin blockchain. And we're in the middle of a miner capitulation stage. And once we reach full capitulation amongst Bitcoin miners, the sort of excess supply that they have currently been releasing and selling into the Bitcoin market could soon dry up. And that means they could again begin sort of accumulating Bitcoin as they have done historically.
But that kind of assumes that demand is going to keep up for crypto when we've just sort of moved out of this cycle where crypto is getting a lot of attention, right?
Well, I mean, if we assume that demand isn't going to sort of go much lower, right? These sort of supply restrictions could potentially mean, I'm saying the possibility here, that Bitcoin could be nearing a potential rebound here. And just to throw in, there's a sort of third thing here is that the exchanges, right? These sort of spot markets where Bitcoin is trading hands, there has been an ongoing trend of Bitcoin outflows from these exchanges since early 2020. And so the liquidity on these exchanges is sort of trending to be tightening a bit as well. So sort of three signals here, right,
yes,
are sort of alluding to the fact that available Bitcoin supply could be restricting here,
but
and that
crypto,
if demand again.
And Bitcoin do seem to be sort of interest rate sensitive, in a way that a lot of crypto bulls weren't talking about, say, a year ago. So given that all the Fed's trying to do, a big part of it is lower demand for all kinds of things, and crypto seems to be responding to that, should a potential crypto investor have that effect in mind?
Well, it's very difficult and really nearly impossible to predict what is going to happen next and exactly what sort of the Fed is going to do. But what I can tell you is that, at CoinShares, monitoring sort of the institutional space, what we are seeing is somewhat of cautious optimism here amongst institutional investors. We publish a fund flows report weekly, and what we're not seeing hand over fist demand here, right, and pouring into the Bitcoin markets. But in the recent drawdowns, what we are seeing is some investors sort of having more flows to these institutional products, right? Generally at CoinShares, we have seen more inflows than outflows.